For many years, the U.S. tax system has continuously shifted in response to policy changes and economic conditions. These changes directly affect the income and spending of millions of people. In today's video, we break down 8 of the most important taxes to help you understand how the system currently operates. Personal income tax in the United States. Income tax. Personal income tax is one of the most important types of taxes in the U.S. tax system. This tax applies to everyone, including monthly wages, self-employment income, bonuses, income from real estate businesses, and even lottery winnings. Personal income tax rates generally increase according to an individual's income level. For low-income earners, the tax rate can be 0%, while middle-income individuals typically pay between 15% and 20%, and high-income individuals may face tax rates ranging from 40 to 50%. Each year, every resident must report personal income taxes to the federal government as well as to the state government where they live. Depending on the type of income and income level, taxpayers must use different tax forms, such as 1040EZ, 1040A, or 1040. This ensures that income taxes are calculated correctly and in accordance with the tax laws of each state. Gift tax. Gift tax is an important component of the U.S. tax system applied when an individual gives another person a valuable gift. Gift tax rates usually range from 18% to 40%. Generally, the gift giver is responsible for reporting and paying gift tax. However, in certain special cases, the recipient may also be required to file and pay this tax. U.S. citizens and permanent residents must pay gift tax on all gifts of assets worldwide. For non-residents who give gifts involving assets located within the United States, Form 709 must be used for reporting and paying gift tax. However, there are certain circumstances in which gift tax is not required, including gifts to the donor's spouse, gifts to political organizations, funding for medical and educational institutions, gifts to charitable organizations, gifts valued under USD $15,000 per year and a lifetime limit of $11,700,000 are exempt from gift tax. Payroll tax. Typically, employers pay part of the payroll taxes on behalf of employees. Payroll taxes are divided into 3 main types: FICA, the Federal Insurance Contribution Act, FIT, Federal Income Tax, and FUI, Federal Unemployment Insurance. In addition, employers are required to pay certain taxes related to employee unemployment benefits. Unlike income tax, payroll tax in the United States is a regressive tax, meaning that if an employee's income exceeds the Social Security wage base, they are no longer required to pay payroll tax on the excess amount. According to 2021 statistics, the Social Security wage base was $142,800 per individual. Sales tax. Sales tax is calculated based on the value of a product or service. Each region has its own sales tax rate, typically ranging from 0 to 16% of the sales price. Sales tax is generally calculated and collected at the time a product or service is transacted. Sellers are responsible for reporting and paying this tax to the local government within the required timeframe. Estate tax in the United States. Estate tax. Estate tax is an important part of the U.S. tax system applied to worldwide assets of U.S. citizens, permanent residents, and residents after they pass away. Beneficiaries must file estate tax using Form 706 within approximately 9 months from the date of the decedent's death. Inherited assets may include cash, securities, real estate, insurance contracts, trust assets, business profits, and many other types of property. After deducting mortgages, debts, estate administration costs, funeral expenses, the portion of assets transferred to the surviving spouse, if applicable, and the lifetime exemption limit, the remaining taxable estate is subject to a tax rate of 40%. Capital gains tax. Capital gains tax arises when a capital asset owned by an individual is transferred. These assets may include investment assets, real estate, business property, and many other forms of assets. Those required to pay capital gains tax fall into three main groups: U.S. citizens, U.S. permanent residents, and residents for tax purposes. All are obligated to pay tax on worldwide capital gains. Non-residents who do not fall into these categories are only required to pay tax on capital gains related to assets or real estate located within U.S. territory. Property tax in the United States. Property tax. Property tax is calculated based on the assessed value of property owned by an individual, with rates ranging from 0.28% to 2.9% depending on the asset type and regulations of each state. Property tax regulations are based on appraised market values, with accurate assessment standards used to determine the required tax payment. Customs duty. Customs. Customs duty is applied when goods or services are imported into a different region. Customs duty rates vary depending on the origin and type of goods or services, and typically range from 0 to 20%. Customs duties must be paid upon completion of the import process. How are taxes paid in the United States? Every year, U.S. permanent residents and citizens must comply with tax reporting requirements and complete their obligations for various U.S. taxes. The final taxable income of an individual is calculated based on the following components. Total income includes annual wages and other sources such as bonuses, investments, gambling winnings, and many other forms of income. Deductions include previously paid taxes, such as federal tax, state tax, Social Security and welfare contributions, as well as property tax, vehicle tax, and interest from bank accounts. All of these require proper documentation. After calculating final taxable income, individuals rely on the government's tax system to determine the tax amount owed. The exact amount of tax due in the United States is calculated as follows. Tax owed or refundable from the government equals tax withheld from initial income minus final income tax amount. In this article, Badger Finance has provided an overview of the different types of taxes in the United States, including personal income tax, sales tax, gift tax, estate tax, property tax, and customs duties. Understanding the U.S. tax system is essential to ensure legal compliance and effectively manage personal finances. Follow Badger Finance to stay updated with valuable knowledge that supports compliance and financial optimization while living in the United States.